The whole goal of Tesla's mandate is to use engineers to increase the efficiency of renewable energy sources so that they may be used as a practical, affordable, and efficient replacement for fossil fuels. Elon even stated that at the time, that was where the energy was needed. Nevertheless, in the interim, Tesla has released some fantastic energy products, such as some very impressive solar tiles that make solar roofs look natural rather than having unsightly solar panels on top of your house. Tesla has also done very little in the way of solar expansion. For example, in Q3 2018, Tesla deployed 93 megawatts of solar power. Tesla started out with vehicles and eventually branched out into energy panels and just 100 megawatts in Q4 2022. There has been no growth in this area of the company, and the financial impact is essentially non-existent. The Powerwall from Tesla is a Varsity Superior battery energy storage unit that can quickly run your home's electricity during a power outage, so quickly that it won't even reset your microwave clock. Although it's an expensive product that many find difficult to justify given how long it may take for it to pay for itself, part of the reason for this is that Tesla doesn't use lithium-ion batteries, which would save money. The Powerwall is positioned more as a convenience product than as a means of saving money. And if Tesla can bring down the price to about half of what it is currently, that will be a huge game changer. Of course, mega packs are Tesla's primary energy product that has any real bearing on the company's operations. We haven't seen any significant growth with mega packs until recently over the last 2 quarters. But the others are doing negatively and essentially losing money. Why is this, you ask? Well, as you may remember, we saw a significant expansion of the Model 3 in Shanghai at the end of last year. This was made possible by Cal retrofitting a factory next door to Tesla with a capacity of 60 to 80 gigawatt hours per year for LFP sales. This factory allowed Tesla to ramp up sales in Shanghai and eventually have enough LFP sales to actually expand NG storage. Additionally, Tesla retrofitted a factory in Lathrop, California, specifically for the production of megapacks. And we had Tesla announce that they finally had enough cells, a claim that many investors believe to be false. I hope that makes it clear to everyone that Texas and Berlin are still severely short on sales. They need literally 3 times as many as they have today, and Texas will actually need 4 to 5 times more when they ramp up the Cybertruck. And when I say that, they try to tell me that I don't know what I'm talking about, because Tesla said they finally had enough sales. This only meant they had enough sales for their variable drive vehicles and could finally start expanding the mega pack business. It doesn't help Texas or Berlin because they need 2170 or 4680 sales, despite Berlin's frequent references to using BID's blade sales. If you've been following me long enough, you know that Tesla and the rest of the industry are still constrained by the fact that the battery industry is really capital intensive and makes sales. This is why Tesla went for 4680 sales, which is why the dry battery electrode made the processors almost 10 times less intensive. As investors, I think it's important to understand how the business is moving in each area. We've seen the ramp up of megapacks, but this megapack factory is basic, at least compared to an electric car factory. It's much easier to ramp up a megapack production line than a Model Y line. So the rate at which this factory is moving is also related to cell supply. Therefore, how will Tesla get more sales? To be more specific, LFP cells, there are plenty of LFP cells already, but they're being used in the rear-wheel drive Model 3S. As Cal ramps up their new cells, the 3P cells, these will replace the batteries in the vehicles offering 10 larger batteries and more range at a guess. A rear-wheel drive Model 3 will come with 300 miles of range, and the Model Y with perhaps 260 or 270 miles. This is a huge deal anyway, I think. Why bother building a new factory for old technology cells that have less value when it's as much effort to make higher value sales? Unnecessary for Tesla automobiles with its updated hardware, improved designs, and new batteries that offer more performance and range. Tesla will have successfully increased demand for the new Model Y N3. Perhaps even more impressively, the Model Y rear-wheel drive will finally have enough range for the US market. The company met the demand for the car with a $7,500 rebate. Now that the Model 3 Highland is starting to ramp up, we can be sure that the Lathrop factory will follow suit and eventually reach capacity. I believe that by the end of this year, the market will perceive that energy is finally ramping up. However, Elon claimed that energy would increase far more quickly than cars in Q4 at absurd levels. Mega packs were an annual rate of 10 giga-hours a year. They could be close to 40 gigawatt-hours a year in Q4 2023, a 300 increase year over year. This will get some attention. Also, this will be noticed in the financials, likely getting to around $15 billion revenue annualized for energy storage. That is revenue only, but the margins are going to be around 25%, with some bulls speculating potentially above 30%. Then, next year, we'll see the new Shanghai Megapack factory, supposedly a purpose-built factory, no doubt on the same site as Giga Shanghai. As the CALP factory is only up the road, I imagine this factory will be constructed fairly quickly. It's a simple factory relative to the Model I factory, which was far more complex and much larger, yet was still constructed in unbelievably first time. Don't forget how quickly things can get done in China. Then when this factory is complete, it will time in well with when the Model Y Juniper update is complete and starts also using CAL's new cells and batteries. The LOP cells can be deployed into this new Shanghai Megapack factory. There are a lot of Model I LOP cells coming from that factory, therefore there would be a good chance that the Shanghai Megapack factory can also hit capacity next year. That would mean another 100 increase in energy year over year for 2024. Imagine now how the market will respond to that 300% increase in energy in 2023. 100% more energy in 2024. Not to mention the actual financials, which would now be around $30 to $40 billion a year in revenue, and perhaps $10 billion in gross profit, a significant amount, a nice base for Tesla diversified as not just a car company, with the evidence to really prove it after that, though I'm not sure where the great for energy storage will come. I think they would just sit on these two factories for a while, perhaps until we see a new generation of cells, possibly sodium-ion, based, as it will lower cost. And although likely be less energy dense, it is still suitable for energy storage. However, I doubt the market would really realize that energy can't grow too much without more sales. They'll just notice the massive growth that they've seen in energy and potentially think it will continue even though it has reached capacity, so the stock price could shoot up in the hopes of that, with many investors thinking that energy could actually be bigger than vehicles, although Elon has recently said that it won't be but might not be too far off, so seeing energy ramp over this year and next, along with likely demand increasing again for Model Y and Model 3 due to these facelifts and upgrades, which could mean the prices increase slightly, especially if we see interest rates start to lower. Well, there's a lot of potential for some good profits and the stock price to react very positively. And yes, I'm not naive enough to forget the Cybertruck will likely hurt some of these profits in the meantime while it rams. However, I also think that it will have a great profit margin, and look how few Model X and S Teslas need to make to become profitable if Cybertruck also has a high price tag, at least initially around $80,000. And it might not be a whole cash bonus. Rather, it might break even at about 3,000 units per month. And as we mentioned earlier, Tesla will have this additional base income from energy.